and live off that for 5 years. And at the end of 5 years, he'll take his $1 million and he'll put it in something else. He's going to take systematic withdrawals, and they're going to start putting his bank account on the 15th, which I wouldn't recommend doing it that close. But the reason why I wanted to talk to you about this is because hey, John Stevenson here, the Guaranteed Retirement Guy. Thanks for joining me today. I'm actually walking through an area where it's closed down because the snow's coming in and they close for the winter, and so it's a little campground here about an hour south of Tahoe in Ebbets Pass. Ebbets Pass gets super iced over. Yeah, if you drive up it during this time of year, you're gonna fall 1,000 feet. So probably not a good idea. But I'm up here, I'm filming, and I wanted to talk to you about a gentleman that I helped with a MYGA. He's taken $1 million, he just bought it last week actually, and it pays 5.85, and he is going to get $4,875 per month for the next 5 years. So he wants to preserve his principal. He was not looking for lifetime income. He was looking to preserve his principal and make some cash, which not bad with the current rates as they are. Almost $5,000 a month, not bad. So that's what he's doing. He did it with Nighthead, and he actually locked in the rate right before they lowered their rates, which was good. You can lock in the rate on the date of the application, and as long as you lock it in the day before, which I wouldn't recommend doing it that close, but as long as you lock it in, then you'll be fine. And he got the rate, and he just submitted his withdrawal form, and he's going to take systematic withdrawals, and they're going to start putting his bank account on the 15th, which is going to start next month. So good for him. And he timed it just right. So he's going to actually get like a full month of interest. Anyways, the reason why I wanted to talk to you about this is because everyone has different motivations for buying annuities. It just depends on what you want. Okay, if you want growth and you want a little bit of income, but maybe you're just not looking at depleting your principal, then you might want to think about a MYGA, okay, or a fixed index annuity without an income rider. That's always a good idea. But if you want highest lifetime income, then an income rider, or this is typically the highest payout, or a SPIA or a DIA if you want lifetime income. But if you're thinking, hey, I just want to live off the interest, make some money and then transfer the money out later, you can do that. That'd work. Yeah, just depends on what you want. I mean, everyone has different motivation. In fact, I have people that'll set up both of these. They'll set up, I have a guy in Reno, he's got like 10 annuities, and he has a bunch of them that are for growth and legacy, and he's got a bunch that are for income. And then he's got money in the market on top of that. So he's able to get his market growth that he wants. He's able to get his market protection and growth from his annuities, and he'll use those for legacy. And then of course he has his income ones that are their income riders, and that's what he's going to use for lifetime income for him and his wife for the rest of their lives. It's pretty cool. You can do a lot of different things with these contracts, and that's what they are. They're contracts. They're not stock, and a lot of times people get them confused, and they're thinking, oh, well, the stock market's so much better. And I'm like, yeah, they're different. They're completely different. You can't really compare the two. You can't say, well, one's better than the other. They serve different functions, okay? It's just like life insurance. You're not buying life insurance to get rich, although the rich use it for different tax-free savings vehicles that you can obviously set up overfunded life insurance. But typically, the rich invest in high yield things like stock and hedge funds and private placements, like things like that. Like that is full of risk, and those have their place. But if you're just looking for high income, and you're looking to take some of that money and turn it into contractual income that you just don't have to worry about. You don't have to worry about, maturity dates, doing bond laddering, anything like that. You can just turn it on and never think about it again. Then an income rider is the best way. But for this gentleman, the best thing for him was to take out almost $5,000 a month in interest and live off that for 5 years. And at the end of 5 years, he'll take his $1 million and he'll put it in something else. So, and maybe at that time he might do an income product, maybe he won't. But either way, at that point, I'll be there to help him. So if you're looking for the best annuity for yourself and you're thinking, hey, I'd like to work with someone who's transparent, someone who's going to show me everything regardless of what they're getting paid, then I would invite you to go to my website, johnstevenson.com, and look through my annuity calculators. I have direct feeds to all of the carriers. You can search for yourself. You can see what the payouts are. And then if it makes sense, then book a call with me. Okay, there is a link there on the website, and there's a link below this video. So, and then I'll show you everything that's available. I mean, it's nothing you won't know, because you'll have a chance to actually research yourself before talking to me. So, and I do like being able to have that. So, yeah, that's what I would recommend if you're looking for that market protection. I would absolutely recommend it. So anyways, I appreciate you for watching. I really do. If you like the video, make sure you like, subscribe, share, comment below if you got questions, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.